know, I know.
It's such a cool community, and so many people reached out on Twitter, now X. Um, like I went to the Minervini Gala, and I was like swarmed by people asking questions, right?
Oh, I bet.
And
I
it's like
bet.
it was very surreal because like I was at the Minervini Gala, 7 years ago, or the Minervini the seminar he does, right? And I was on the other side. I was the guy going up like, man,
Yeah.
like what do I do? What's going on? So it was like really like wild to just now you're on the other side, right? And like they're asking you questions, and it's like, there was yeah, I was asking the same stuff, 7 years ago.
I'm curious, did you feel like any added pressure last year at all during that or no?
No, not at all. I don't care about the contest, to be honest. It doesn't matter.
That's cool.
It
I
doesn't
was just
matter.
curious about.
I mean, I'm trading to make money, for my family. Like it's like winning the contest is great, but like, I mean, it didn't, if anything, it made me want to be more disciplined because I didn't want to be. I mean, you see the guys that are up, 600%, half of the way in, and then like they drop off, right? Or the guys that are up. There was one year I think where a guy was at like 300% in February, and then like he stopped posting, and it's like what? Like how'd that happen, right? It's like well,
Yeah.
obviously he blew up, right? I mean, so I definitely didn't want to have that happen. So I was like really focused on keeping the drawdown control. I mean, that's something that I had been thinking about for years before that, and was like trying to do it, and then. Like I would lose discipline, I would lose focus. And then that year it just everything clicked, everything clicked.
Do you think the competition so you or sorry you don't think the competition helped give that discipline to avoid that more
I
drawdown?
think it might. I think no. I think it definitely helped because it was I felt like people were looking at watching me over my shoulder.
Yeah.
Because like I was
Yeah.
like, even if because you don't have to report every month, but I'm like, what, I want to report every month and show them that like I'm not like swinging like I want it to be like a grind higher. I don't want it to be these crazy swings. So no, I think it did help in that regard. Like having I guess like an accountability in a way.
Mhm.
I think yeah.
All right. All right. Well, we got a good crowd in here. I'd say what time is it? 8:06. Yeah, we're probably good to get started here. Chat looks pretty excited. Okay. I had told everyone to go back and watch a trailer line video so we didn't have to really cover all the same stuff. But very briefly, we do always like to start with just a brief like backstory about how you kind of got into the markets. And you don't have to go super in depth, just a general idea, where you came from and how you got involved.
Sure. So, I mean, I think it started, I want to say in high school during the tech bubble. My dad, who's very risk averse, was speculating in internet stocks to give you an idea of how crazy it got back then. And I remember seeing an article about GLW, which Corning Inc. I mean, you can pull up the chart on TradingView, but the stock went, I want to say from 20 to 80 back to 20 and then to 3 maybe. And I think we bought it, I remember 20 because we bought it around 20.
Oh
And
my.
yeah, there it is. Yeah, we bought it around 20. Yeah, oh, it went to 100. Okay, it went up to 100. I mean, we rode it all the way up. We rode it all the way back down. So, yeah. Um, but yeah, I mean that was like my first real exposure to the markets. I interned or I worked for a friend's dad, really nice guy, who was a full service old school broker at I want to say like Payne Weber or I forget the name of the company. It was acquired by Merrill Lynch. But he was like old school, like charging like 3% per trade or some like insane commission. And I mean he had no idea what he was doing. I mean he was just trading like penny stocks, like random small crap garbage. But yeah, I worked with him. And I remember he gave me Warren Buffett's security analysis, which I was just like incomprehensible to me. But then I picked up how to make money in stocks, read it, made perfect sense. I knew like if I was ever going to trade, that's the way I was going to do it. And then I was hooked on Reminiscences of a Stock Operator. That book was like that book just was. I was like, wow, like I want to do this. And I mean, if you've watched the interview, you know, like I played poker in college. I traded a little bit after school. The firm blew up in 08, 09. We traded Treasury and Treasury futures, and then I played poker professionally for 10 years and got back into trading, which was actually spurred by Trump's election. That was a market-wide episodic pivot. I didn't know what an episodic pivot was at the time, but I just knew that the market, if you look, yeah, you can see the market was going sideways forever. And then I remember on his election, it broke out, and I was like, oh wow, like it's a new bull market. And I told my wife like I'm gonna start trading again, and that's what sparked it.
Wow, yeah, look at that move. You
Yeah,
brought some luck to the market there.
yeah.
And for anyone who doesn't know, how would you kind of like explaining your current trading style, how you like to trade, kind of your setups and stuff like that?
Yeah, I mean, I trade, heavily inspired by the O'Neill books, Mark Minervini, and Qualamagi. So swing trading. In the perfect world, coming out of a bear market, I'd like to hold the positions longer. That's something I personally struggle with. I still do, even though I know I should be able to hold them longer. It's very difficult for me. But I would say swing trading, episodic pivots. I do best buying breakouts. I struggle buying pullbacks. That's something that I struggle with. But
And why
breakouts,
is that, do you think?
because I don't like being in the red. So if I buy a pullback and it kind of chops around a moving average, I don't like that. I like knowing right away if I'm right or wrong.
That's fair. Yeah. Awesome. And back during during this time when you got involved in say late 2016 and 2017, were you trading similar to that or completely different at the time?
Then I was trading much smaller because when I started trading, I was like, I'm going to start trading small. So I think I had a max risk of like 0.5% per trade, and I traded with a fraction of my total assets. So it was like, a very small risk per trade. So there was almost no. So you would think there would be no emotion, especially because I just played poker for 10 years and would routinely swing, tens of thousands of dollars. But I remember I was risking, a few $100s per trade and I would get so emotional. I would feel like the fear. I mean, $300, which is like, not that much. I would
Yeah.
I would feel it. And I'm like, I remember like thinking like, dude, like you play like high stakes poker. Like, why are you having this reaction to a few $100s? It doesn't make any sense. But it's trading is different. With poker, the money is at risk when you're in a hand. And when you're not in the hand, you're out. There's nothing happening. In trading, it felt like I think Minervini calls this, it feels like an exposed nerve. When you have money at risk, even when you're in the green, you're seeing it fluctuate. There's an emotional reaction to that. So it took me a long time to get used to that.
And how much do you think that poker background it benefited your transition to trading, or maybe even hurt it in some aspects?
I think it was very beneficial just because I was actually going to talk about this in the Trader Line conference about because you lose so much in poker, you constantly lose money. Even the
Hmm.
best players can go on these losing streaks that last months, sometimes years. So, my trading, I think it was like a winning year, a winning year, a losing year, a winning year, a losing year, a losing year, a losing. I had like two or three losing years consecutively. And I think most people would probably quit at
Oh
that
yeah.
point
Yeah.
because that is very, very hard to deal with mentally. I mean, especially when you have the added pressure of, a wife who quit her job so you could pursue trading. You have kids, you have another one on the way. That really puts a ton of pressure on you to make money and make money right now. So a lot of that losing was forcing trades, pressure to make money. I mean, every mistake you can imagine, I was making it because of the pressure to perform right now.
Awesome. Now I had originally connected with your interview a lot with Richard Moglen because of your mention of boom and busting, which I don't think many traders really talk about. I haven't heard it from many traders, literally maybe just you and Charles Harris from what I've seen and studied. And can you dive into that a little bit? Just maybe explain the boom and buster for like, folks who really don't know really even what that is.
Yeah, a boom and buster is characterized by very large swings in your equity curve. So you will go on huge runs and then you will go on large drawdowns and then large runs and then large drawdowns. And, some boom and busters, they will, the boom takes them to, well positive, the drawdown, they're still positive. And then the next boom takes them up and then so, I mean, that's how I would describe it. Large swings in your equity curve. Not necessarily trending upward. You can be a losing boom and buster. You can be a winning boom and buster. I was thankfully a winning boom and buster, but the drawdowns in equity. I mean, it would. I mean, there was one year, 2018, I was up 100%. I think 6 months in, and I finished the year up 20%. Okay, and then 2019. which was a fantastic year for the market. I mean, that was like a very strong rally. I believe I was down 30% in a year that, and what's wild about that is that I was probably on average 150% long the entire way up. And
Wow.
I was consistently buying the local tops and then exiting at the intermediate lows to then when the market would take back, I would buy back, and it was just like an absolute train wreck. Absolute train wreck. So that, I mean, and then 2020, I think at the start of 2020, I had another like 15-20% drawdown, and then I actually finished the year up 2020 up 150%. And
Wow.
I actually stopped trading in October or reduce the size to a minuscule amount because I was like, you know what? I'm up so much. I recovered all the losses I had. I don't want to give it back. Okay. So I slowed down when I actually was in, if you look at NIO, I bought that like 3 times. Yeah, that run there. So like in
Yeah.
October, it broke out of like, it had like power play flag on top of flag. Yeah. So I bought, yeah, that gap there. I bought like that gap. I bought the next move. I was in it like 3 times, but with like, no size. I think that was Oliver Kells, one of his big winners that year. But I was in that trade, but I just had no size on because I was like so scared of like busting again. So I
Yeah.
actually
Yeah.
prevented like I could have been up, a lot more than that if I had kept the gas, kept the gas on.
Hey,
So, oh, go ahead. Go ahead.
really quick with like that 2019 example, are you while you're buying the local top and selling the intermediate bottom and kind of experiencing that like bust portion or that drawdown portion of your equity curve, is there what's going through your head when you're analyzing the market? I'm talking like day by day, not like big picture, but like when you're looking at a new setup, when you're looking at the market as a whole, and when you're kind of thinking about your style, your approach on a daily and weekly basis, when you're kind of towards the middle or the end of that drawdown period.
Right. So you can actually, I'll show you the stocks that just wrecked me. So if you go to Cron is a marijuana stock. I can show you exactly what happened. Um,
I remember this one.
So look, yeah, they're like, yeah, okay. So if you look at like early January 2019, it formed like, a pretty wild VCP there and broke out, right? And I think it doubled pretty quick. And then you can see it looks like it's flagging. Yeah, right there. Yeah. So I missed that buy, okay? And then it ran up and I was like, okay, well, this is one of the leaders. It looks like it's forming another base here, like a power play, right? So you can see those big green bars. Yeah, so like that big green bar, that one right there, I bought that one for sure. Oh, sorry, I bought before that. I want to say 4 bars before that. Yeah, in there, yeah, that one for sure. I bought that one. That stopped out. I probably bought the 20 EMA pullback. I probably bought that day, and then I definitely went like hyper aggressive on that bar. That bar, I was probably very aggressive on, and then that one ended up failing as well. So that right there was easy 5% of my account, if not more.
Yeah.
And then if you look at what was the other one? SE.
Yeah.
So this is one that I remember this one vividly because I remember this is before I like understood what an episodic pivot was. Okay. So you can go even farther back. Yeah, there, that big green candle, right? So I watched that breakout all day, just watching it. I mean, look at that. I mean, look at that base. I mean, that's like, oh my God. I mean, now I'd just be salivating over that breakout.
Yeah.
I
It
mean,
looks like oddity right now. Like an
Beautiful.
oddity on earnings is what that kind of
yeah,
looks
Just a
like.
Oddity.
big, big
So
IPO
I
base.
watched Oddity break out. The issue I had with Oddity was the spread was like 50,
Yeah.
60 cents. The spread was so much. I didn't feel comfortable buying it. But I mean, C was very liquid, I remember. And I
Big
mean, so I
volume.
didn't buy that day, okay? But if you look, you can see it, it's doubled. So now in that the next so in that area, yeah, in that area there, I'm buying aggressively. And I got stopped out of all the, and I was pyramiding, I was trying to get really heavy, and I got stopped out of all of them. And then I'm sure I bought it back at some point in there. And then you see those wicks down to like the, yeah. So I'm sure I got knocked out in those, like that candle 4 bars before that. Yeah, that one. I'm definitely buying that, and I definitely got knocked out. And then, so I mean, I got chopped up to pieces in this, and then I might have. I don't think I bought the gap, but yeah, that, and then that one shook out as well. So I mean, those two names, and the thing, and Cron never made new highs, right? But C just kept advancing. But I remember those two names just killing me in 2019.
Okay, so are you considering, during that time while you're getting, stopped out of Crown or SE, are you thinking about, like starting to buy pullbacks? Are you thinking about, different stock selection? I mean, are you going through any sort of crisis? Not crisis isn't the right word, but are you?
It was kind of a crisis. Yeah. No, I was trading other names. I mean, so I was in winning trades, but those two names, because every loss, I would be more convinced that the next one had to work, right? So
Yeah.
I was trading large and raising the size on the next buy, thinking like it has to work. Like this looks just like these big winning stocks. I mean, SE was just like, I mean, it looked great. I mean, it did everything you wanted to do, but it just kept stopping me out. So yeah, I mean that the busting is when you just take the consecutive, consecutive loss, consecutive loss, consecutive loss. And the first trade maybe you risk 1%, the next one 1.5, the next one 2, the next one 2.5. And before you take 4, 5, 7, 8, 9 in a row, and before you know it, you're down 15%, 20%. And it's like, whoa, like where'd that come from? Right. So I mean, so that's what would cause those bust periods.
Yeah.
Yeah, I think, Charles Harris has a great quote on this. He says the most important aspect of being a consistent winner is managing your drawdowns. Large drawdowns are the enemy of compounding, and compounding is the secret to building great wealth.
Yes.
Um, and I'm curious if there was a sort of like a wake up call moment, or a period through the last few years where you were just like, okay, I'm a boom and buster, and like something needs to change, and
Right.
and it needs to change now.
Yes, the change was going back and reviewing my results and just seeing, wow, if I just cut every losing month at like 5%, like all my marginal losing years, they're like they're break even or profitable, and all the bad losing years now they're like -5, -10%, which is which sucks to lose for a year, but that's recoverable, right? I mean that's not a problem. It's the -30%, -20% years which can really hurt. And then of course, your confidence is gone, your confidence is shot, you're in a drawdown. You take a trade, it goes green, you just take it because, oh my God, I finally been a winner. And then of course that one keeps going, right? So it really like, like the negative compounding definitely happens when you're in a bad drawdown.
Yeah, and you mentioned in that Traderline interview, you mentioned in like a sort of anti-martingale strategy.
Yeah.
And is this something that you think has impacted you like in a really big way as far as managing those drawdowns?
Absolutely. I mean, you want to be pressing when you're winning. You do not want to be pressing when you're losing. So, and the beauty of that is, if you listen to Minervini, is that you always want to be trading your biggest when you're trading your best and your smallest when you're trading your worst. Unfortunately, that means sometimes, if you're off and the market's going, you're going to miss it. But that's okay, because because you don't know if the market's going to keep going. It's more important to protect yourself and your account. Like what everyone else is doing, doesn't matter. That's one the things with the Hong Kong guys I met up with in Asia was that some of them, they're all trading for like 2 to 5 years, and some of them are like really concerned with like what's happening on Twitter. Everyone's making money. I'm not. This. I'm like, guys, like it doesn't matter. Like it is like
Yeah.
you need to focus on your goals. What is your objective, right? It doesn't matter. That guy's at 500%. That's great. Because first off, there's crazy survivorship bias on Twitter, right? No one's going to post on Twitter, I'm down 25%, and everyone's crushing it, right? You're not going to see those posts. You're going to see, guys beating their chest because they're crushing it, right? You're not going to see the guys getting wrecked. So you have to keep that in mind. And also, like, it doesn't matter what anyone else is doing. You need to be focused on, what you want and what you can do for yourself, really.
Reminds me of
Sorry,
the Nvidia quote, Rocco.
which one?
The
Oh yeah, yeah. That's it. That's a good one. Yeah.
uh,
Um, so you'd mentioned there trading your trading your biggest when you're trading your best and whatnot. And I've heard you talk about, and this is a philosophy I really follow as well. Is sizing big into the best setups,
Yes.
right? And I think a lot of people would have the question for you. How do you get to the point where you can easily know what those best setups are?
Yeah, that's a great question. Experience. You have to trade and trade a lot, or not trade a lot, but you have to have a lot of experience. So there's several ways to do that. You trade yourself and you trade 100, you trade for years and years and you see what works and what doesn't. So you have a spreadsheet, a journal of what works and what doesn't for you. And then you can go back and study history and study other traders and see what worked for them. and see if that works for you. That's what I would say. So I have, I mean, you saw my Evernote in the interview. I have hundreds of charts in there of, the greatest winning stocks for the last, I mean, 100 years really. And you go in and you see, what worked in the past. And if you study those charts, you have confidence that it works, and then it's gonna come back and work again.
Awesome. And I have two more questions regarding last year kind of
Sure.
stuff, and then I want to get to kind of like, more current stuff.
Yeah.
Now, I'm not sure many people have seen it, but your equity curve you posted last year. You had two really big runs, I think, in like January, February, and then maybe like May. And a lot of your time last year was spent in a drawdown.
Yes.
And how do you manage that, especially like not a really deep drawdown, but just a steady, slow drawdown, right, for maybe even consecutive months.
Yeah.
How are you able to mentally like just handle that and get to that point where you can just be comfortable sitting in a drawdown for that long?
Yeah, I mean, so drawdowns are normal. The new account highs are what's rare. People, I guess people expect to constantly be making highs, but that's just not how it works. You're going to spend most of your time drawing down. And if you have watched or read Paul Maggi stuff, he talks about that, about how a majority of the time you're in drawdown. You get these spurts up, and then you're just treading water. So that's part of the game. Like I said, I've been in multi-year drawdowns, so that is a part of the game. And I mean, hopefully you never are in that yourself. I mean, hopefully, I think I mentioned that, I made a huge number of mistakes. I mean, the pressure of trying to make money right now for the family, for the kids, for everything, put a huge amount of pressure and created a ton of trading errors. So if you can, avoid that, the drawdowns don't have to be that long and that deep. But it's just part of the game. I mean, the drawdowns are part of the game. How do you get over it mentally? That's just the cost of doing business. I mean, if you want to, if trading was easy and you're just winning money every day, I don't think there'd be much of an edge for people. I mean, trading is very, very challenging. So that's just part of the game.
Awesome. Now I had one question specifically for myself regarding this Nvidia trade last year.
Sure.
I know you had a really massive position in this. I'm sure far bigger than any position you'd probably taken in the past. And what is it like sitting through a trade like that with that big size for like a decent period of time? Like how do you control yourself from like taking profits or fear of giving back with a
Right.
position size that big?
Right. You have to have conviction. That's the only way to possibly not take profits early. You need to have a lot of conviction in the name. Um, and from everything that I've studied, I mean, this is like, a culmination of, 7 years of trading, reading every book you can imagine, studying the grades, studying previous charts. You have a name go up, what was it? 700% from the lows, something, from 10 to 50 or 5, 6, from 10 to 50, right? And then it's first base. And this is not, a small cap. I mean, this is like a mega cap tech name. Um, to me, it's like, I mean, those kinds of opportunities. I mean, Tesla 2020. I'm sure Apple had a few setups like that, but those kind of setups are rare, but they will happen again. I mean, to me, that I just had to be as aggressive as I possibly could with a setup like that. I mean, it's first base coming off the lows. And so if you read the Stan Weinstein book and Nvidia, he talks about how, he doesn't want names that are 50% off the lows. You want names a minimum 100% off the lows before their first base. But even better is when they're 200, 300, 400, 500%, which I think a lot of traders don't. I mean, they read it, but they don't get it. I mean, or they don't really like ingrain it. I mean, Weinstein talks about the same thing. The more powerful the initial thrust before that first base, the more likely that if it continues, you're going to get a very powerful move. So when I scan for stocks, I'm looking for names up the most. I want names up the most before they form bases. And to have a mega cap tech up that much in that period of time, leading the market, I mean, that's just it's just very rare. It's just very, very rare.
So it was just one of those moments where all the years of hard work and studying, and it all just fell into place in like
All the
one
stars
trade.
aligned. I mean, I have not
Yeah,
traded anywhere near that size on anything since then. I mean, I have not. I think the largest position size I've taken since then is like 40, 50%. I mean, nothing has been that that clean.
that's amazing.
What's the
Um,
other one? What's the other one that you've traded like 40 or 50% on?
Well, I mean, SMCI, I would think I was like 200% Nvidia and like 50% in SMCI at that time. Yeah, I was like, I mean, I was fully margined in those two names. I mean, that's how I had that huge return in January, February.
Yeah.
yeah.
But since then, I mean, I'd have to check. But one sec, let me see. I'm actually curious myself. So again, so much of it is like, the liquidity of the stock. I mean, my account's not that big, but I already experienced slippage that I didn't really experience before. So I'm much more careful of the names I trade. I mean, like when Oddity broke out of that episodic pivot, like I actually passed on it because it's not that liquid, and the spread was like 60 cents. Um, so let me see. Uh, so-
The spread was wicked on Oddity. Yeah, it's I mean it still is.
Let me see.
Um but
Oh, I mean Palantir. Palantir was the last name I sized on.
right
That's
on.
what I was gonna guess. Yeah.
Yeah,
Um,
Palantir. I mean that the gap at 99, I was large in it then.
quickly, just regarding a question in the chat, someone had asked if you if you had built into these positions on Nvidia SMCI, or most of the size or all of it just on the breakout day.
I had a very small position when it bounced off the 50-ish at like right in there.
Yeah.
Yeah, I think I was maybe like 10 or 20, like 15% right in that area. Yeah, and then that the day before the breakout, I had another 10% on the breakout. I bought some at the open, and then I just put everything they let me through 500. Yeah,
Yeah.
And then that was the last day you bought there, and then you just let it go.
and then I just let it go. Yeah.
Awesome. Okay, so we have some questions in the chat that we'll get to at the end, that I want to get to most of them. But for now, I kind of want to you talk about this year a little bit now. And I kind of just want to go maybe just like not spend too much time, but just kind of month to month, and kind of how you approached each month, and maybe some notable trades, or some maybe change up in aggressiveness, or whatever throughout this
Sure.
period.
Sure. So, I mean, so I actually started the year off. Like, I couldn't actually believe how good it was. My first trade of the year, or like my second trade of the year, was CRNC.
Oh yeah, yeah, we trade this
Yeah,
one
on that
too.
gap. So I literally bought that perfect.
That was
And
the Nvidia headline. It was like the first EP of the
yes,
year, kind of. Yeah.
yes. So I didn't size particularly, I mean, at 0.75% risk, but I caught that. I sold half of it at 23. And then I was like, I'm gonna try to let this one play out. So I'm gonna hold to the 8 day with the other half, and that didn't work out as well, unfortunately. I mean, it doesn't seem like much, but I ended up selling what half 23, the other half at like 13, 14-ish. But
Chris,
that was a great start to the year, and then I think I lost the next. Let me see how many trades in a row I had after that were losing. Then my next.
So it was January 3rd to
I
8th
think
ish.
I think I lost, yeah, let me see, 40. Yeah, I think I lost 36 out of the next 38 trades after that.
Wow. Yeah.
So, yeah, so thankfully that was a big winner. So I didn't, I mean, I drew down, but I pretty quickly started slashing size after that because I just wasn't winning.
Now, is
Um,
it a feel thing, or do you like mathematically have a system that you size down with?
I mean, it's a feel thing, but after that big winner, I sized up for the next few trades, and then I mean, yeah, so it's like 1.6, 0.9, 0.6, 0.55, 0.5 step, 0.4, 0.3, 0.3, 0.15,
And that's risk of account.
yeah, that's risk to account. Yeah. So it's just like just steadily
Yeah.
stair stepping down. It's just like lose, 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 lose. I was just, because in the past, those drawdowns from peak, like in 2018, where I was up 100, then up 20, it was like I went on this huge run. I was at all the leaders. I nailed it perfectly. I exited at the top, and then I started trading the laggards, and it was just like 1% risk, 1% risk, 1% risk, 1% risk, 1%. And then I had, like 20 out of 22 trades losing. And like before you know it, it's like, oh wow, I just drew down a ton. So that, yeah. So I mean, it was the progressive exposure. It was just steadily cutting as I lost.
Gotcha. And then and then when we finally actually, broke down February into March, were you really doing much in here at all?
So I was in a bunch of the stocks, like the last of the Mohicans, as Minervini says, like the last leaders that tried to get, like they had, I think it was like a firm
Yeah.
and maybe Upstart and like Archer and LEU. I mean, there were a few and Docs. There were a few names that had like
Yeah.
like gaps that I tried. Yeah, like Docs, like that gap. So I was in a bunch of episodic pivots and they all failed. And I was like, okay, like that, it's over. Like and there was nothing else setting up. So I was like, it's over. I'm gonna wait and see. I actually did get a few shorts that worked out well in March. So I mean, I was actually pretty happy with how I traded that part of the sell-off. I was in Micron on 321. You can see that it had a
Yeah. Right here. Yeah.
yeah, on that gap down, I believe on earnings. But you don't have the 200-day on, but if you look at the 200-day, it literally every single high,
Yeah.
yeah, it literally got rejected yeah, 4 times. So I was looking at that, and then on that gap, I was like, okay, like let's go for it. And unfortunately, I covered before Liberation Day.
Yeah.
I covered before Liberation Day, but I was in a few others. I was in FTAI as well
Nice.
as a short on, let me see what day. I was on 4/3.
Yep. This breakdown day here.
Yeah, yeah. So I shorted that and I covered that like the next day, I think. I mean, I haven't done very well shorting in the past. And in my experience, if you get a profit, like I take it pretty quickly. It would be different if you were entering what I thought was a prolonged bear market. Like you had like a really long stage three top forming in the indexes, as well as a lot of leading names. But I didn't see that. So I was just like hit and running, just like taking the profit
Oh,
when
I've been there too. And when you let the profits on the short side ride a little too long and you get used to it and you like it, and then when the market's ready to turn, you're not ready for it at
oh
all.
yeah,
And
the
that adjustment
snapbacks.
is very hard too to
Yeah, the
switch
snapbacks
back.
are very fast when on the short side for sure. And then I was and then on the long side, I mean, I mentioned this on Twitter briefly that I thought I played the lows. I mean, it was almost too well how positioned I was, and then I just butchered it. I mean, I was not patient enough in a lot of the names that I was in. I bought Palantir on 4/7 literally at 60. My fill was 69.27. So
Oh
so
wow.
I,
Yeah.
I I bought it. If you go to the 5 minute, you can see I bought it when it took out the that gap. It gapped down. Um, and then when it took out that initial 5 minute high, I bought it.
Yeah.
I
Right
don't know if
here.
you guys remember back then, but the fear was just crazy. I mean, it was like end of the world, like
Oh, I know. I
1920.
stayed up all night April 6th, and went pretty heavy that day on April 7th. That was one of my most memorable moments. It was
Yeah,
crazy. I mean, I think that night on April 6th, like every single world market went like limit down that
yeah.
night. It was crazy
Yeah,
actually.
the fear. I mean, the fear was just off the charts. I mean, I wasn't even. I made money on the downside, not much, but I made some. But I was feeling like terrified, and I'm like, I'm in cash. Like, why am I scared? But I mean, it was just so pervasive, like
Right.
market-wide fear. I mean, you could feel it, even if I was in China on the other side of the world with like that time delay. Like my wife has no idea, the kids, no one in China has any idea what's going on. But I'm like, oh my God.
Yeah, yeah.
But
Seeing the
I mean,
indexes move like that, I mean, that's it. I mean, you'll see that once a decade, maybe.
yeah, yeah. So I was in Palantir. I bought Q's, the same thing off the lows. Uh,
QQQ?
QQQ, yeah.
Yep.
And then I remember I was doing all these like back tests. All these people were posting stuff on Twitter, like the back test, what happens when this. And I remember seeing one where like when you get like that snapback, right? Like it shouldn't, like normally don't get it. Yeah, that big 1 day rally, right? That the next day I puked out of Q's near the lows. Um, and that I mean, I should have been more patient with the trade. I just remember seeing the dollar. So we didn't talk about this or we mentioned it before it started, but when you increase your account fivefold, so I don't know what you guys do if you're constantly withdrawing from your account or
Yeah.
if you let it in, keep it in and try to compound it.
I withdraw as frequently as I can to pay for stuff around the house, pay for bills and stuff. So
Yeah.
that
So,
every month,
so
every 2 weeks, every 2 months, whatever.
okay. So I don't withdraw at all. Like you had to put a gun to my head to get me to withdraw from the account. It's like, honey, the rent's due like right now. It's like, okay, fine, I withdraw to pay it. Okay, I have everything in the account. So that also, if you want to reduce the emotions when trading, I would not advise having all of your money in your trading account, right? I mean, so like here's another tangent. So at the gala, at the Minervini Gala, it's an annual thing, hopefully. But I spoke to one of the other presenters who was up. I think he had averaged 100% plus for 5 years, like plus 300, plus 100, plus 50, plus 100. Plus. And afterwards, I pulled him aside and I was like, man, like the returns are incredible. Congratulations. How do you deal with slippage? Because, my account's not that big, but I've already experienced, like I think this year because I track my slippage because I usually enter and exit with stops. Okay. So I've paid, I think 70% of my last year's account balance in slippage this year so far.
Wow.
Okay.
No, wow.
So I was asking like, dude, like, how do you deal with the slippage? He's like, oh, no, no, no. Like I withdraw everything every year. Well, I'm like, what do you mean? I'm like, oh, he's like, oh, I'm up to it. Like, I withdraw. Like, I don't compound. I'm like, well, why not? Because your results are, incredible. He's like, oh, no, no. If I leave it in, I get too emotional. I start making a lot of errors. And I thought I was like, oh, wow. Because it never occurred to me that guys would be withdrawing because, like, the power is in the compounding, right? The power
Yeah.
is letting the account grow, but that creates a whole nother issue because now you have to deal with the increased dollar amounts, right? Which I like to think I'm good at dealing with, but I'm, it's difficult because the emotions are now amplified even more than in the past.
Hey, so Christian, trading for a living and to pay for life expenses, you will then like be forced to withdraw when the expenses occurred. Like no, okay.
Yeah. And that's another thing when talking with the guys in Hong Kong that when you're trading for a living versus you have a job, you're playing different game. You're playing a different game. It's like the stakes, the emotions, everything is I mean, it's obviously the same game, right? The emotions are similar, but it's different when this is your profession. Like this is what you rely on to pay the bills versus you have a backup source of income. It's very different. Yeah. In my opinion. I mean, I think the guys in Hong Kong agreed. Yeah.
Yeah.
And so after that Q's trade, you would have Palantir, and then as things started to develop, did you just increase and get more and more aggressive on positions and stuff?
I added to so I didn't exit Palantir. I exited the queues early. I held Palantir.
Yeah.
I added on the gap day where it gapped. Yeah, on that day. So actually after looking back, so I had 130% of my account. So I actually was mistaken. I had my entire account in at that point. And then I sold it on I was not going to hold through earnings. Sold it on 2 days before that.
Okay. So right here.
No, 2 days before that.
Oh,
That day. Yeah, I was out on that day. Yeah. Um,
and
and
what was the reason for what was the reason there?
too much money.
Too much money. You sold the whole position?
I exited the whole position.
Okay.
Earnings was coming up in 3 days, and
Yep.
I was like, I'm not going to hold this entire position through earnings. Um, so yeah, but I remember talking with myself about this before about how if you just held for the 50-day, you'd make a lot more money, right? I mean, you're coming out of like, a brutal bear market. People were terrified. The fear was off the charts. Like you could just close your eyes, buy something, and then like if it closes below the 50-day, like you're out, right? And I'm like, I just can't hold it. I mean, I'd like to think I could, but it's very, very hard with the dollar amounts. I mean, this is one of the downsides of having so much money in the so much money of your personal net worth. I think that really affects affects the trading. I'm gonna be honest with you guys. I'd like to say, oh, I'm a machine. I just held 150% of my account through earnings and just wrote it up, but that's not what happened.
And did you get back involved at any point after earnings?
Oh yeah, I got stopped out of it like 6 times after. Yeah, I bought it on I 2 days after, yeah, that day I bought it on that yeah, that day there on the 8th after earnings.
Yep.
And then I believe I exited when it closed with the 8 day or the
Yeah.
10 day. Yeah, that day I exited there. I bought it back 5 days later, I think. Or the big, yeah, that day, yeah, bought it back that day, got stopped out on that day. Yeah, so it's been choppy, but it's held the 50 day the whole way up. I mean, I spoke about this in the interview about how
Yep.
holding for the longer term moving averages is it's a better play, and you avoid so much of the chop if you do that. Um,
Yeah, I remember you talking about specifically having a really hard time holding stocks as they pull back like deeper like
yes,
that.
yes.
Is that something? Is that something that you want to do? Like again, I know you mentioned it now. You mentioned a trader line interview, and I saw the numbers of the additional 2024 performance.
Right.
You would have trailed just blindly trailed a 20-day, blindly trailed a 50-day on those positions. I know some effects are because then you'll have that money available for other trades, right? So the numbers aren't black and white. But is that something that you want to see yourself doing on a position like this Palantir to continue to hold it from that spot to now with a 50-day trailing stop?
I mean, with hindsight, obviously, I would I would have loved to hold it using the 50 day. Um, it's the difference. It's like fog of war, right? I mean, in real time, especially with the time zone change, and I was having like this. I mentioned to like I was like having these like crazy cramps in my neck and back, and I wasn't physically at my best. But yeah, in the ideal scenario, I would like to hold it for longer term moving averages, but it's extremely hard to do with the position sizing, right? If it was a 10% position, it's like whatever, like I can hold it, but
Yeah.
and then that's the balancing act, right? Between like conviction, because I had conviction in the name, I was super long it, but holding through the pullbacks when you have so much of your account at risk, it's you know that's really the hard. I mean, that's what William O'Neill was able to do. He could have his entire account in like two names on full margin and hold like through these crazy pullbacks. If you go back and study like 98, 99, which I have like a ton of charts from there, the volatility in those names was like pretty wild. And if you look at the names he was in, they swung a lot, and he was
Yeah.
just riding them higher. So it takes a special kind of trader to be able to do that, with a large percentage of your account, in my opinion.
And what are some other names you got involved with since the correction kind of finished?
Sure. All the, Spot, Hood, Rubric. I've been in a lot of different names. Unfortunately, I've gotten knocked out of a lot of them. Let me see. I was in Coin briefly. All the names that, all the leaders. At some point or another, I was in them. What really got me was CoreWeave. That was a name that I was super bullish on. Oh my God, I was so bullish on this. I bought this name April 7th, I believe. You go back to April 7th.
Oh, wow, yeah, right here.
I bought it April 7th, got knocked out in two days later, and then I bought it on May. If you go to May that day, yeah, May, yep, that day, May 1st. Uh,
Oh, wow.
I got no. I got stopped out the same day.
Oh no. Oh, I
Yeah.
remember that day. Yeah, I
Well,
Yeah.
remember it.
So
up
it
and
gapped up, and then I think it triggered a 1 minute or 5 minute opening range breakout, and then it stopped out, closed
yeah.
at the lows of the day, and the next day it gapped
Yeah,
up.
oh, I remember
So
that.
I missed that move, and then I tried to get back on earnings. So on earnings day, it was gapping up after hours. I tried to buy it after hours, got stopped out. The next day, it did a 1 minute opening range breakout. I bought it again, got stopped out, and then at the end of the day, it did a 5 minute opening range breakout, and I didn't take it. And then,
That's
well,
the one I bought. Yeah, I bought it that day because
yeah, yeah, yeah.
it like broke the opening range and then it came back all the way to the lows and then just
Yes,
had this big turn into the end of the day. Yeah, I
yes,
remember
yes.
that.
And I did not take it again, and then the rest is history. I did buy it off the 8 EMA on like June. Let me see, June 12th, I think, or June 15th, somewhere.
Yeah.
Yeah, that day. Yeah, I did buy that day, so
Yep.
I was able to get a little bit out of it, but a fraction of what I could have gotten, especially given my conviction in the name. So that's probably the only thing worse than missing a move is getting stopped out of the move multiple times when you have the conviction to actually hold for the run. Like if I had gotten on board, I would have had the conviction to hold this because to me this was just it was just like eBay in 98.
Yeah, we'd
Bad
studied
bear
that.
market,
Yep.
recent IPO in the hot sector. I mean, just like exactly like eBay, and
Yeah, you made that first comparison. I think you posted it on Twitter.
I was all over it. I'm dude, it was and this is the difference between analysis and trading, right? You can be the greatest analyst in the world, but if you can't get on board the name and stay on, it doesn't matter.
And is there anything that you think you could change, or is that just your system not working
That's my, I
on this
mean,
stuff?
I've thought a lot about this. So this happened to me also in 2019. There was a name, I think it's delisted Coupa software. I mean, there was a few names that did action just like CoreWeave, where they would gap and then they would pull back like right to the moving average, but it would knock me out. And then the next day they would just take off. And it's like, I can't buy it. It's extended. So a part of me thinks that, because this is what I'm thinking about. But, this will happen again. There'll be another bear market. There'll be another CoreWeave. This is gonna. So I think the next time I'm gonna have to do something where it's like you just buy it and and use a wider stop, like close below the 20-day. The thing is, you can't get size. I wanted size in this name. I wanted to
Yeah.
be really sized in. So, I mean, yeah, I get a 5% position in or 10% and use the 20-day. I could, but I really wanted to get size in this name.
Oh, that's so unfortunate, man. Oh my
Yeah,
gosh.
it's part of the game. It's like
It is.
I've missed so many trades over the last 8 years. It's like it's just another one. Granted, this one would have been really nice. I mean, Tilray's probably. I mean, I got a part of Tilray, but the Tilray move is even wilder than this one. I mean, I'm sure you've
Yeah.
studied Tilray, but that
Yep.
name just whoa. I actually got on board that one, but I sold it way too soon.
Nice. I'd like to look at some questions from the chat. I didn't
Of
save
course.
any. TSCR, did you see any good ones?
Actually, I've been involved, just drawn into the conversation. Well, I've got a question I want to get to. Is it more, I guess, on a day to day kind of approach, but you're constantly, like you said, trading some of the best names, right? You said the leaders, the winners. You've been in them at one point or another. So I'm curious, kind of, especially being in Hong Kong for 4 months, outside of your home and traveling. What does your, I guess, routine look like? Like scanning process, watch list construction, focus list decisions before market open. Kind of take me through some of that day to day decision
That's a
making
good one. Yeah.
process.
Yeah, sure. So, geez, I have a focus of all the leaders. I'm
Mhm.
watching them, to form what I see as setup. I'm looking for VCPs, I'm looking for power plays, I'm looking for pullbacks. I have a top focus list. I have a focus list. I have a ton of names. I mean, can you be more specific? Like, I mean, before the market opens, I look at what's at the most. I look for episodic pivots. Yeah. I mean, that's.
Are you scanning the news on some of those episodic pivots?
Oh, of course, of
Yeah,
course,
okay,
of course.
okay.
Yeah, of course. Yeah. I mean, it's like,
Um,
I mean, everyone's trading the same names. I mean,
yeah.
it's like, in the past, I would always think, oh, I need to find, the undiscovered gem. But it's like, the leaders, they're the leaders for a reason. I mean, they're the names showing the most alpha. They're the names really running. So it's just, can you get on board them at a logical spot with tight risk and hopefully ride them? I mean, that's really, the objective when trading.
For something like yeah, what I consider two of the best gappers recently, MP obviously last week. Is this something? First off, that's kind of janky action on the daily. The past
Yes.
like the first 2 days. Is this something that you're involved in right now, or uh,
I I was trying to get in on day two. I did take it over day one's highs, and I used the day two low of day as my stop, which did get stopped out. So I was in it and I got knocked out.
And then something like QS QuantumScape, that move, which I think is very comparable to ASTS early in 2024, kind of that
Yes.
early cheaper price per share stock, but similar structure. I know the chart looks like crap long term, and it's got a history of popping and fading, but is this something that you consider? Is this something that you traded at all?
I was also in it on day one of the breakout and got stopped out.
Wow, he was. Okay. Yeah,
Yeah,
we were wondering if you'd taken this or not. Because
I did.
I know you had mentioned in your trader line interview that you're not the biggest fan of like EPs like off the lows, like a stock that has maybe a lot of overhead supply or like
Yes,
multi-year downtrend, right?
yes. Yeah, yeah. I mean, I personally, I mean, this is why I don't like them because I don't think the success rate is as high. And then, but yeah, I mean, I will try them. I will try them. I'm not obviously I'm not going with huge size. I'm going with like moderate size. But I was in QS. I got knocked out, and then the next day it took off. Yeah, yeah.
Are you?
That's part of trading. That's gonna happen a lot. That's
Oh,
part of the game.
absolutely. Stock Pradeep's gone into a lot about delayed or moves, delayed upside pivots, if you will.
Yes.
Have you? Is this something that you've looked into and tried to implement at all?
I have looked into it. It's something, if you go back to Tesla in 2013, that had a delayed EP when it broke out of its like initial IPO base. So, seeing that historically and then seeing the move it had has gotten, yeah, geez, you have to zoom back. Wow, yeah. So that one actually pulled back to the 8 EMA. Yeah, it formed like a tightish area you could have bought off of. But yeah, I mean, so yes, I mean that is something that I definitely look at. The day two EPs where they just kind of go,
Mhm.
it's harder to buy because of like like with MP, right? I haven't had much success. To be honest, I don't really trade it that often. It has been working. The delayed EPs have been working, more so. But I prefer I prefer the clean day one and then it just takes off
Yeah.
for sure. Yeah.
Absolutely. And then something like Coinbase. I guess besides before speculating on some other things, what are some other moves that maybe you captured really well, or that you want to digest of this recent move? Maybe something that you wish you would have maybe traded better, or something that you did trade really well. And one more
Sure.
trade.
I mean, so I got in on INSM and Oracle are two EPs
Yeah.
that I did get. Yeah. I mean, those were textbook. I mean, they were clean. They just broke out and kept going. Um, Let me see.
It's classic. You're just buying the opening range, stop at low day.
Yeah, exactly. Um, Let me see what else. NKTR.
Nice.
I was in that one, but I held that for the 10-day and I got knocked out I mean, I was still up on the trade, but not what it could have been, unfortunately.
And is the EP for you just a classic, big gap up on news on big volume, pretty much?
Yeah.
Okay.
So I mean, I traded this one with tiny size, but SGMT, I'm still in half of this position on that EP down there. Yeah.
Oh, okay.
Yeah, but that, again, these are the biotech. I mean, this was like a microscopic position. It was just, yeah, I saw the EP as like, I'll trade it. I'll trade it super small.
And one question, quick: Are you analyzing some of the relative volume at open? Is that something that you strictly monitor on some of
I mean, I want to see. I mean, you want to see huge volume. I mean,
Yeah.
that's a good sign that it has a better chance of working. So yes, so like, for example, SGMT, the average daily volume is like 500,000 shares, or two less, 300,000, right? So like, I'm not going to touch a name this thin, but I think at the opening range, it traded. I mean, some massive volume. So I was like, okay, I'll give it a shot. I think it had traded probably 1 million shares in the first 5 minutes, or some crazy volume. So I was like, okay, I'll give it a shot.
Yeah.
And is a name like this really even moving the account that much?
No, it's not.
So are you say taking these just to like maybe get like reps, kind of, in a way?
This this was I saw it and what day was that? Let me see.
June 4th.
June 3rd. Yeah. I had reduced my position size significantly because I had been knocked out of Palantir and Nvidia. So I was like I'm just gonna take a small trade to keep a pulse. That was it.
Yeah, that's fair.
Making contacts.
Yeah,
Yeah.
just to see, see what happens. Yeah.
And what is some of that small position? Are you talking like 0.1%, half a percent risk, or
The
5%
risk was
size?
0.15%.
Yep,
So yeah, tiny. Yeah.
right on. Any action on some of the nuclear names? Oklo, SMR,
Oh
LEU.
yeah, I traded those names as well. I was in. Let me see. I'm trying to see it on my other monitor. In a sec. Geez, you know what? I remember this. The first EP on both of them, in May. So I missed these trades. I was beating myself up over CoreWeave,
Mm,
and I also tried taking Pony on earnings as well.
yeah.
And and I got knocked out there. So I sized up for that one too. So I had sized up with CoreWeave. Um, let me see how much I sized up. I think I went like I think I did multiple. Yeah, 1.5, 1.25, and then Pony was like 2. So I had sized up on those, and I lost all three. And I was like, geez, like I gotta like slam the brakes here because this is how you can start quickly losing. So then I just passed on those EPs.
Yeah.
And then of course,
Oh
like,
man.
oh, oops, oops, I should have taken those. So yeah, my Oklo, SMR, LEU. I mean, they all had simultaneous EPs, and that's like one of the most bullish things that can happen is when you see an entire sector have an EP simultaneously. I mean, that's like screaming at you to buy, but I was too tilted from the trades I made before.
And would you say so far, I mean, I guess since the April low, like those EPs kind of news gappers have been like most of your trades?
Geez. Most of my, yeah, I mean, oh yeah, geez, sorry, how could I was in Sezzle and Dave. I got the EPs in Sezzle and Dave. Yeah.
Okay.
Nice. Okay.
Okay. Yeah, I was in both those EPs.
The two best ones.
Yeah. Yeah.
And how did you
I
manage
sold them
these?
way too soon, but yeah, I was in both of them. But yeah, I mean, I should still, I mean, yeah, I should have rode those much more. But again, I sized those pretty small because the
They're both
liquidity,
steady too.
the liquidity, I just couldn't, I just couldn't size up due to
Yeah.
liquidity. But their earnings were fantastic. I mean, if you actually read their earnings reports, their earnings were just off the charts. Yeah.
Just
Yeah, we've
off the
noticed time
track.
and time again too. I mean, some of the biggest movers have been these EPs, like days or even just like a week or two off the after the market has bottomed. I mean,
Yes.
some of those
Yes, for
like
sure.
Palantir and APP after the August
Yeah.
correction
Yes.
last
Yes.
year. And Dave and Cesar were kind of those two
Those
this
first
year.
EPs, and I was in ADMA. I tried that as that had an EP which failed. Yeah,
Okay.
yeah, that one. So that's actually, I mean, that's all-time highs. That gap there, like multi-year
Okay.
all-time
Okay.
high, and it was like a really good news, but it didn't.
Oh, I remember that. Yeah, I remember the news that day.
Yeah.
Yep.
So yeah, but no, I was in David Tesla. Yeah, I mean that's the mistake I made was not being more patient right off the lows. I just remember being just really. I was like I remember being shell shocked with the market, and but
Oh,
like
me
I said,
too.
I
Yeah.
avoided the pain. But I just remember being like I was like jumping at my own shadow. It was crazy. It was crazy. Yeah, I
Well,
mean, I hope I'm not disappointing too many people that I'm this like robotic market wizard, but yeah, I'm human. I have emotions. I make a lot of mistakes. I make a lot of mistakes trading, but
that's perfect. Not
yeah,
everyone. It's going to be forever. Like I say this all the time. People ask the question. I used to see it in 2021 all the time when the market was going nuts. But people would ask the question to some traders like, when did you make it? When did you feel like you made it? And everyone who gave an answer to that question, I'm like, yeah, I'm skeptical of you because like you're always going to be making mistakes. You're always going to be improving something or want to be improving something. And that, like, it's just constantly a process of lessening your mistakes, lessening the
yes,
impact, and bettering the impact of your successful
exactly.
trades.
Exactly. I mean, I've made so many. I mean, if I traded perfect, the results would be I'd probably be up double what I am year to date. But yeah, it's really a game of just incremental improvement, just slowly every year, every month, you just try to reduce the mistakes. And I still make mistakes, but nothing like before. I mean, nothing like before. And every year you just try to get a little bit better. And then before you know it, you're profitable. And then you keep reducing the mistakes, and before you know it, you're really profitable. And then you can get like phenomenally profitable when all the stars align, you're trading well, you see that fat pitch right down the middle, and you just swing and you connect, and you're like, whoa, holy shit! Like I never, like I didn't enter the contest thinking I'm going to make 400% in the, I mean, that was not what I was thinking, right? But it happened because I connected and I mean, I traded great and I took the opportunities that came and, yeah, that's,
And do you think, performing how you did last year and your results and everything, do you think that that helped like motivate you to really, keep things tight and really try to, just do better? I know you had made a lot of mistakes before that, but did that year really like confirm it for you? Like, okay, I can do this, like kind of mindset?
I always believed I could do it. I always had this like borderline delusional belief that I could make it because I know other guys had done it, and I studied so much, and I put in so much time, and I knew that like if I got the right environment, that I could make it happen.
Yeah.
The guys like Kwalamagi that are putting up like what, like 9 triple-digit years in a row. I mean, it's like insane. I mean, that is obviously the exception, not the norm, right? I mean, guys like that, not only doing it, but like doing it with size, right? He compounded the whole way through. It's one thing to, I mean, there was one of the market wizards in the last book. He was up, he's making 100% a year every year, but he's trading like a $50,000 account, right? I mean, that's obviously impressive. I'm not taking anything away from that, but I can tell you as the account grows and the slippage increases, like the degree of difficulty goes way up because it really limits the universe of stocks you can trade in. And I mean, just imagine if every time you entered and exited, right, you paid an extra 10 cents. Okay. And then imagine 25 cents. Then imagine 50 cents. Then imagine I mean, because that's what happens. I mean, unless you use, like TWAPs or VWAPs, or you're using mid price and trying to get in, like if you're trading with market orders or stops, like the slippage really does add up over time.
A good question from the chat. Someone had asked, does he do or do you do a lot of trade logging, and how detailed do you if you do?
Uh, Trade logging, like,
Like
Review.
tracking your trades, like
oh, I'm extremely detailed. I mean, yeah, yes, I do, yes.
Do you do that every evening on a weekly basis, monthly basis?
Like review my trades.
Yep.
Oh,
Or
that's a good. Geez.
after a cycle, are you doing it on the weekend, in the evenings? Are you doing it after a run, after a completed trade? You know,
I guess I do it all the time. I mean, if nothing's happening, like I'll go back and look at my trades. So it's not like a structured thing, but yeah, I mean, I'm constantly reviewing my trades. Yes.
gotcha.
yeah, I see you keep looking over and going back, and you have like logs from like every day and what you did each day and blah blah blah
Oh
for
no,
each
it's
trade.
not that detailed. I mean, I have a journal which I'll update, and I have every trade with like details, and I have like, I mean, I have like a spreadsheet with like I try. So yeah, if you take the Van Tharp Trader test, I don't know if you've seen that or taken it.
Nope, never heard of it.
Oh, okay. Let me. So if you Google Van Tharp Trader Test, you answer like 15 questions, like either or, and then it tells you what kind of trader you are. It's like strategic trader, administrative trader, detailed trader, like all these different trader personality types. And then he'll send you like an email saying like what your strengths and weaknesses are. Okay. So I took that and I was like shocked at how accurate it describes me. So I'm a detailed trader. Okay. So the strengths are you keep like meticulous records of everything. The weakness is you are very, very uh critical of yourself. Like you beat yourself up. And I'm like, that is me. I'm like, yeah, that's it right there. Yeah.
Yep.
I beat myself up badly when I make mistakes. I make a lot of them. So the thing with a detailed trader is you have to be able to forgive yourself and get over the mistakes. So so like I actually when I am talking to you guys, I'd rather talk about my bad trades than my good trades. But
I was gonna say you've honestly mentioned more mistakes you've made than winning trades you've had since we
yeah,
started, which is
yeah,
awesome.
yeah.
That's
Eh,
great. That's great because
yeah,
that's where first off, I mean that's where we'll learn from is those because we can build from that experience just as if we would right our own, well not just as if we would our own losing trades but or mismanaged, but it's the learn learning from those mistakes, whether it be missed opportunities, stopped out trades, is been the single biggest driver. Like than a winning trade, right? You can read in any sort of model book, any sort of playbook, what a winning trade, what a model book trade looks like, and of course that's important just the same. But the feel that you get from those other ones, like you don't forget.
Yeah, definitely. Definitely. I mean, you learn a lot more from the mistakes than the than the wins for sure.
Now, I'm curious. I have one more question. Do you have any big goals or anything you're focusing on, like specifically this year, maybe going to the second half of the year? Anything you'd want to improve on, or anything you're really focused on right now?
Any goals? I'm going to try to trade well. I'm disappointed with my trading this year. I feel like I've made too many mistakes. So, going forward, I'm going to stay really focused, and I've cut size, and I'm just going to stay focused on trying to execute good trades and stick with my plan. I mean that's really all you can do. I'm yeah, that'd be my answer. Yeah.
Any bigger picture goals? Like career, life, personal. Um, you know,
With trading, I mean, geez, I get, my goal every year, going forward. Geez, I mean, I would love to double my account every year. I don't know how realistic that is. So much depends on the market, but I would love to make 100% every year. I mean, with I want to say like a 20% drawdown from peak equity. I mean, that would be the goal, I think. Not a monthly drawdown, not like a, like a, yeah, I mean, that'd probably be my goal for sure. That's something I was thinking about today, right? Where like because last year I made enough money now where like I can just kind of chill. Like I don't have to push myself anymore. You know what I mean? Like if I make 15%, like that's enough to cover all the bills, right? So it's something I've been thinking about, and I actually was thinking about it before this call, where it's like I really want to focus and I want to go for 100%. I don't want to. I still have the fire. Like I really want to keep performing.
That's super
I really,
performance. Yeah, yeah,
yeah.
100%.
Yeah, I mean, I want to keep going. I want to like lock in and go. The China was really tough. I mean, the time zone change, the cramping. I mean, I think I went to like the Chinese doctor for acupuncture like 10 times. It was like excruciating pain. I couldn't turn my head. I know it's like crazy, but like trading, like any little thing can really mess you up. So I no, I really want to lock in, and I hope I get another chance this year. I think I probably will. Maybe today was the start of a little pullback. We'll see. We'll see.
Yeah, I was going to ask you that. What do you think of the current market conditions? What's your kind of thoughts?
Yeah, so I was actually shocked at how much IWM and MDY had pulled back today, considering how well more of the speculative names held up. So
Yeah.
that actually gets me pretty excited. I hope we get a multi-day pullback. I mean, so it seems like with how strong the market's been, we're just going to snap back tomorrow. But if we get a multi-day pullback and you have names like, let's say we pull back for like a week or two, right? And NP goes sideways, okay? I mean, that would just be like, oh man, I'd be like drooling over that. I mean, if you draw a horizontal line way back and look at its all-time high, right? Yeah, go to weekly. You can see where it's like right there at the all-time high. So if you get like, a multi, like a 2 week pullback right below that level, like that would be something I would be very excited about. And there's a few other names too. I mean, OUST broke out today. I'm in that one with small size. I'm watching IREN, I'm watching CIFR, they're forming power plays as well. Um, yeah, so, IREN or, like if they can, hold in those flags while the market pulls back, they look, I mean, they're, more speculative, being lower priced.
Hmm.
IREN's a little wild, but, the volume on the flagpole looks pretty constructive to me.
Yeah.
So yeah, no, there are speculative names that have held up very well, even though the market sold off today. So I'm not, I can't be that bearish. If you saw these names get like crushed and leaders sell off, then it's a different story. But my watch list was like probably like 50% green, give or take,
Hmm.
even with some of these more speculative indexes selling off. So yeah, I mean, we'll see what happens. Tomorrow can change everything, but yeah, we'll see.
Awesome. Well, a good luck the rest of the year. I would love to have you on again at some point, whether it be, end of quarter three or later, even at the end of the year would be super awesome. But yeah, thank you so much for coming on. This was huge. I hope you guys in the chat enjoyed this. I'll be watching it over again myself probably tomorrow morning and taking notes in my Evernote. So yeah, thank you very much. And yeah, wish you luck the rest of the year, Christian.
Great. Thanks, Baraka. Thanks, guys.